G'day folks, Jim here from FX Charts, Monday the 10th of February. Thanks for tuning in. Well, the dollar's been under a bit of pressure since the missing the non-farm payrolls, and surprisingly so is the yen, which didn't act as a safe haven as we might have expected, and actually the dollar has risen against that. So the yen crosses have all moved higher. As I say, the US dollar's under a little bit of pressure, although there's not an awful lot of activity early in the week. So we're going to have a look at the charts. And the euro, as you can see, it closed, we're having spiked to 136.42 straight after the release of the numbers, then fell back, and it closed up against near its highs. Opened up this morning with a little bit of a gap lower, but it's not really done anything. It's trading at 136.20 at the moment. I'm not sure that we should expect too much today. There's not an awful lot of activity out. We've got the Sentix Investment Survey from Germany, but there's not an awful lot really until Janet Yellen's testimony to Congress tomorrow. I think she's probably likely to suggest that the economy does continue to pick up, albeit pretty slowly, and there's a few gaps along the way. But overall, things are probably slowly heading in the right direction. So I don't think until we see that the outcome of that, we should expect too much. Now, 136.50 could well cover it on the top side if we go and look at the 4-hour charts. Now these are a little bit messy, but if we look at the move down and the retracement levels there from the top at 138.92 down to last week's lows. Currently we're sitting up against the 38.2 level. That's about 136.30, and if we break through there, we're going to come into some pretty strong resistance at 136.85. Not only is that the 50% pivot, but there's also a couple of Ichimoku levels up there, both the daily and the weekly Kijun lie at 136.85. So I think that's going to be pretty strong if we get up there. Beyond 137 to take us back up here to 137.30, and a break of that would see us go a fair bit higher. But in the meantime, we're within this channel now. That the top here comes in today about 136.5, so that may well cap it. The 4-hour charts they're positive, but the hourlies are not really showing an awful lot. They're actually turning a little bit lower, and in the very short term, we actually have some bearish divergence developing on the 30-minute charts. So I think overall some more choppy trade, and that's probably best seen in the dailies, which although they look as though they're trying to possibly head a little bit higher, they're not really. It's not really significant, and I don't think we're going anywhere too far. We've got the 100-day moving average now sitting at just around 136 the figure, so that may be a support on the day. If we go below there, then I think we're probably headed back to 135, and well, we've got the 50% pivot here of 135.90, and below there, the spike low at 135.50 seen just before the non-farm payrolls. That should easily cover the downside today, I think, and I don't think we're going anywhere close. If we do, there's going to be more support down here at around 135.20, and then at last week's lows down around 134.75. We might head back there later in the week, but I really don't think today's the day, and probably suspect that 135.80 to 136.5 or thereabouts should pretty much cover it. Dollar yen, well, that's opened with a bit of a gap higher this morning, and is trading at 102.55 at the moment, having been up to a high of 102.64 first thing this morning. It looks as though the dollar's reasonably well bid now. We've got some FIBO levels coming up here ahead at 102 sort of 80 area. Last week's high that's at 102.90, and then we've got the 61.8% of this whole move down. That's at so 103.25, and I don't think we're going up to 103.25 today. On the downside, back below 102, which probably looks equally unlikely at the moment, but 101.70 would probably hold it. And as you can see on the hourly charts, we've got the 100 and the 200 hour moving averages look like they're going to both cross at that around about that level. So I think that's going to be fairly supportive for the next session or two. And the 4 hourly charts are kind of supporting that view. They look as though they're heading a bit higher. Further out, the dailies had been heading lower. They now look as though they're trying to be a little bit supportive. Now this chart's a little bit messy, so I won't go into it too deeply. But as you can see, the 100-day moving average is now at around 101.20, and I'd be very surprised really to see us get back down there. Moving along to cable. Well, cable it broke higher in line with a softer dollar, and it's managed to get above the 200-hour moving average. It's pretty much sitting right on it at the moment, and on this 38.2% FIBO resistance of the whole move down last week from 166.67, I think was the top. Now the hourly charts look as though they're running out a little bit of steam on the top side. I don't think we're really going anywhere too far. Definitely till Yellen's testimony, but quite possibly until Wednesday when we see the Bank of England's quarterly review and Mark Carney's outlook, which he may move the forward guidance along from the current 7% unemployment that they're currently using, given that unemployment right now is 7.1%. The 4-hourly chart, so they're still looking positive, and the dailies, they're looking pretty flat. So that kind of makes me think that we could see a little bit higher. I don't think we're really going anywhere too far. And if we get back to this sort of trend line that's been broken, if we get back and test that again, that's around 164 3/4, 164.80. I think that could prove toppish. And equally on the downside, I think 163 3/4 probably covers the base today. So all up a bit of a range trader, and I'm a little bit non-committal at the moment on the dollar. The dollar index doesn't look very good right now, and we could see some further US dollar weakness in the days ahead. Dollar Swiss, well, that's chopping around pretty much in line with the euro. We got this spike down to 89.5 or thereabouts, and ever since then it's jumped around. It's currently sitting just above its weekend's close at 89.80. I'm once again, we've got some very minor bullish divergence perhaps building on the 1-hourly charts, but the 4-hourlies are not showing us anything. If anything, we might move a little bit lower and test 89.5 again, but beyond there I don't really see too much today, and the dailies are completely flat, so which is a pretty good clue to leave it alone, I think. The Aussie, well, the Aussie actually got up to 89.99 on Friday. Didn't quite trigger the barrier options at 90 and now it looks as though it may be headed a little bit lower, but I wouldn't read too much into it today. I don't think there's not an awful lot out. We've got the Chinese new loans out, and that's about it. Thursday's the big day for the Aussie with the jobs data, and then on Friday we've got some more Chinese data, the CPI I think it is. So the 4-hourly charts, as I say, are possibly pushing a little bit lower for a retest of sort of 89.20 or so, possibly 89 a figure. I don't think it's really going down there today though, and if so, if it does, it's probably not a bad buying level, because the daily charts will still remain reasonably positive, and we could yet see a test up here to sort of this 90 3/4 area, but that looks some way off. The Kiwi is reasonably well bid at the moment. It's come off a little bit from its weekend close. It got up to 83.95, I think the high was on the 82.95, I beg your pardon, on Friday. The dailies are mildly positive, but they're not really doing an awful lot. We've got the 100-day moving average sitting right on top of us. We're sitting there now, and quite honestly, as I said before, leave the Kiwi alone. There's too much of this up and down, sideways movement, too many spikes. So if anything, I would trade the range and sort of sell it above 84. Buy it on a dip back towards 82, but bearing in mind that we're probably looking at an RBNZ rate hike early next month. So that's about it for today. As I say, there's not an awful lot out, just the Sentix Investor Survey, and then tomorrow we've got Janet Yellen. Wednesday sees the Bank of England quarterly report, and then Thursday, Friday we've got the Australian jobs and the Chinese CPI, and also the EU GDP, which will be quite important and a bit of a focus towards the weekend. But that's about it for today. Have a very good one, and we'll talk to you tomorrow.